We have oil on the back foot today, but our currency is hanging in there. 76.65, up 5 ticks against the greenback. Look at the run it's had year to date. Look at the run it's had just since the beginning of June. With that much strength behind it, of course, the debate comes out, the bears and the bulls. Some calls out there that it could go to 80 cents, and then other Bay Street economists saying they wouldn't be surprised to see our dollar step back after the year that it's had so far. What do we make of it all? Let's try to figure it out. Adam Button's the chief currency analyst at ForexLive, and he joins us now. Where do you see the Canadian dollar heading for the rest of the year?
I think I'm very optimistic, really. I think people don't appreciate how well the Canadian economy's done so far this year. I mean, the data has really lapped other countries in terms of beat after beat in terms of numbers. And then you look back at relatively everywhere else has stumbled at the same time, and that's why we are where we are. Oil isn't really cooperating at the moment, but a lot of the things have come together for the Canadian dollar, and what we're lacking right now is the consumer.
There would have been a time on a day like this and the punishment we're seeing in crude oil that immediately would have shown up in the Canadian dollar. But a lot of people have said, I think you've made this argument as well, that correlation, that's not what's driving the bus anymore. It's central banks driving the bus.
Yeah, and you see it sort of in the intraday. You see the oil sell off, but it's down 7% over the last week or so, and we're still right near the highs in the Canadian dollar. Now, tomorrow we get the Canadian retail sales report, and I think if the consumer were to kick in that's almost the overdrive for the Canadian dollar. We can easily get to 80 cents. Right now, the consumer's done nothing since November, but that was about the time mortgage rates went up. And now they're coming back down. You know, we're seeing data from May, so it's a little behind us. But if the consumer starts to pick up in the months ahead, I mean, there is a lot of blue sky ahead in the Canadian dollar.
Is Stephen Poloz going to be comfortable with that? I mean, the chatter around this bank in particular with Stephen Poloz as the governor, the man in charge, is that he wanted to see a lower loonie. I mean, Benjamin Tallow over CBIC, he said it over and over and over again. But this standing pat on rates while the United States is getting ready to cut, this is not going to result in all things equal in a lower loonie.
Absolutely. And when Poloz started out, he was really bullish on Canada's prospects because of the lower loonie. He thought it was going to create some kind of export boom. But it never materialized. And the thinking more so at central banks now is that a lower currency isn't going to have that export drag that maybe they thought 4 years ago or 5 years ago. So I think they can tolerate it, you know, for 5 cents, 6 cents above where it is.
Now, the American dollar, let's take a look at that as well, because, of course, if we're comparing the value of our currency, we compare it for the most part against the greenback, and they have their own drivers down there, namely a central bank that is just ready to pull the trigger at the end of this month and cut those rates.
It's really shocking because the U.S. dollar and the U.S. economy haven't done that poorly so far this year, and they're worried about inflation, some of them, and some are worried about global trade. And there's really a debate right now whether this is going to be an insurance cut or the start of a cycle. And that's a major difference for the currency. It's pricing in now the start of a cycle, but we've had some good numbers, and I think the Fed isn't going to show its hand yet and just say, okay, we're going to cut, and then we're going to wait and see. And I think you might start to see a little bit of dollar strength on that. But I still think the Canadian dollar can hang in there.
The biggest mess I can think of right now, if you want to talk currency, is Brexit. It doesn't get any prettier. It only looks like it's getting uglier. And we saw the pound earlier this week drop to lows I think we haven't seen in about 2 years.
Yeah, there is just this storm of fear in the UK. It's headline after headline, and they have this incredible press in the UK that is so sensationalist, so headline-driven and competitive that it's made everyone so scared. And I compare it to almost the debt ceiling in the U.S., which is coming up now, which is this scare tactic over and over. Nothing ever happens. I mean, we ignore it entirely now. But Brexit, and a hard Brexit, is that, to me, it's not going to happen. It's firmly not going to happen. And there's this fear that's hammering the pound. And there's just no way. Parliament voted again today to block anything that would prorogue Parliament during this period. And it's just clear to me there's no desire in the public, in Parliament, in business, anywhere to let this happen. It's not going to happen. The pound will recover, but it might skid along the bottom here for months to come.
Now, the easy advice obviously would be just to steer clear of the pound until we get some sort of resolution, and God knows when that's going to come. But there are reasons why people might have to trade the pound. So what do you do as a currency trader if you have to trade this currency?
I think if you have to either be in the pound or out of it, I would be in it at these levels. I mean, we're coming off the lowest level since, I think, April 2017, just yesterday. But it's overdone to me, and yes, it can get worse. I mean, we're at that point where you can have a complete breakdown, but Canadian companies, a few of them have waded in and bought assets in the UK, and American companies, and I just think it's an incredible time to do that, because at some point these politicians will refocus on getting growth going, and they have a lot of levers to pull in the UK, and it will come together eventually for the pound.
Only about a minute left. Is there a currency that you have your eye on that we're just not talking about?
I think it's gold. I think I'm so excited about gold right now. We're talking about the Fed, right? 25 or 50 basis points, or the start of an easing cycle, or a one-off, or something like that. But the big picture, we're at the top of the mountain here. This is the big turn. We're not going any higher than we are in rates right now. And we're going to either have a recession now, or a slowdown now, or later. And when that comes, you're getting more QE, you're getting a currency war, you're getting political instability. Any one of those is going to get gold back to record highs. And I think it's just a matter of time.
Gold bugs are loving what you just had to say on that, and clearly it's been on a roll over the past year. Good to see you again, Adam.
Thanks, Greg.
Adam Button's the Chief Currency Analyst at ForexLive.